In this video, I'm going to break down my prediction for Bitcoin and the crypto markets for 2026 and how things have changed. It's no longer the easy 4-year template where you could time the tops perfectly, Q4 post-halving year, take profits, buy cheaper in the bear markets, and wait 1,065 days for a price to go from low point to high point, as it's been doing repetitively for the past 3-4 year cycles. It is different this time. It's different because of one specific factor, and that factor has to be understood, so I'm making this video. Guys, watch until the end. I promise you it's going to be very, very valuable. I'm CryptoKid. If you're watching this video as brand new content, I'm CryptoKid. I've been making videos here on this channel for the past 4 years, almost on a daily basis, and I've been in crypto for the past 6 years, giving it 24/7 of my time. With that said, if you've destroyed the like button for your appreciation, we can go and jump right in and understand, first of all, how it was so predictable to time these market structures and why it is different beginning of 2026. You see, Bitcoin has a combination of 3 different 4-year cycles. The first one is the Bitcoin halving cycles, which you must have heard of. It is where the new amount of Bitcoin that is entering into the daily circulating supply is cut down every 4 years. There are something called graphics cards, which your computer, your desktop have, and they can be used to mine Bitcoin. Mining Bitcoin is just solving complicated mathematical equations to let Bitcoin transactions go through, and that helps decentralization, very simply put. And in exchange, you get Bitcoin as a reward. The miners get Bitcoin. Every 4 years, the amount of new Bitcoin given to miners is reduced by a half. Therefore, new Bitcoin introduced to the supply becomes less and less and less. So when there's less supply, but there's more demand, the price of Bitcoin goes to the upside. That's one 4-year cycle. The second one is the presidential electoral cycles. It was a coincidence that every 4 years, there's a new president, new administration, new laws, new legislation, so on and so forth, that also has a contribution to Bitcoin's price. The final 4-year cycle, which is the most important one out of all, the business cycles, that controls the amount of money that is flowing across the world. What is that? Well, money can be measured, or the money supply can be measured in a few ways. You can measure it with the M1 money supply, the M2 money supply. You can look at the balance sheet of the Fed. It can be looked into through different angles. For this example, I will show you the M2 money supply and the balance sheet of the Federal Reserve. The M2 money supply, currently reading it's reading currently what, 22.3 trillion, looks at the amount of, let's say, dollars and other dollar derivatives that's drifting around. The more the governments print money, and governments have the ability to print money, the less valuable that money becomes. And then you see things like the S&P go to the upside. You see things like Bitcoin rush to the upside. Bitcoin has a 90% correlation to liquidity, and therefore M2 money supply too. So the more money they print, the less valuable money becomes, and Bitcoin, stock market, etc., they naturally incline forever because they're printing money forever. This is where investors, people with money, they seek assets like the S&P and Bitcoin to put their money in to make sure it doesn't die away to monetary debasement and inflation, which is the dollar losing its value. This is why you're going up forever, all right? And every 4 years, the business cycles, it looks at interest rates, it looks like the Federal Reserve balance sheet, which is when the bank of the country, right? Countries have the central banks. In America, it's referred to as the Federal Reserve. They can, again, it's periodic, usually 4 years, they can decide to sell the amount of assets that they own, which makes it a restrictive environment for monetary policy. It's not the most active time in the market when they're offloading assets. And then when they start to buy up assets, they're depositing money into commercial bank accounts, simultaneously reducing a rate. So there's an abundance of money to borrow. It's very cheap to borrow. Businesses can go to their bank, they can borrow money at a cheap cost, invest it into factories, invest it into employees. There's more sale of goods. People have more money to buy goods. It's fantastic. And then you see an expansion in the economy. and that expansion can be tracked by the ISM PMI data. It's been 4 years. That was the periodic shift in these business cycles, at least since the inception of Bitcoin. When I put it in parallel with Ethereum, the ISM that tracks these 4-year business cycles, look, Ethereum peaks, so does the ISM. That shows expansion in the economy. Then when you go into a contraction, Ethereum comes down. Expansion, Ethereum goes up. Contraction, oh no, Bitcoin hasn't gone up because there has been no expansion in the economy. So whereas the Bitcoin 4-year cycles has been operating in the normal way that it has been operating, the presidential cycles has been operating in the normal way that it has been operating, in 2026, we're not seeing that same operation from the business cycle perspective, and it's the most important one. What changed? Well, instead of refinancing about $6.5 trillion of debt last year, they've rolled it over into 2026 this year to compile it to $9.5 trillion. That move changed the 4-year cycles to 5 years. And they did it because interest rates were still too high. And if they were to refinance $6.5 trillion at 4% interest rates, they're going to pay hundreds of billions almost in interest. So President Trump had the opportunity to change the Fed chair, the most pivotal individual in deciding what these interest rates are going to be in 2026. And currently he's expected to pick one of two candidates, either Kevin Hassett or Kevin Warsh. And we know they're pro-Trump monetary policy, which would be reducing rates to almost 1%. That could happen. So they want to introduce a lot of liquidity in this year. We're going to get quantitative easing. We're going to get less interest rates. And it's causing things to not match up. When we go to Bitcoin USD, you will see that at the top of the previous cycle, right over here in 2017, this was when you were going into quantitative tightening, and it led to markets to drop. And then quantitative easing, where the Fed bought up assets and put money into commercial bank accounts, allowing people to borrow money, allowing for businesses to flourish and economic expansion to happen and altcoins to run. That happened mid-cycle. It didn't happen at the end of a bull market. So it's different. And because of this difference, I don't think we're going to experience the drop that took place in 2021. Instead, I think we're going to experience the consolidation that took place in 2019. The liquidity cycles trump everything else. So when we put the Bitcoin picture, the red line, the current price for Bitcoin, and overlay it with that 2019 price action, we should expect a very long consolidation. Another data point to prove that we're very similar to 2019 instead of 2021 is that quantitative easing began, or quantitative tightening, which was the reduction of the assets in the balance sheets, that ended, and 2 months before Bitcoin had a cycle or a mid-cycle top. QT ended in December last year, and Bitcoin had a top in October, 2 months before QT ended. So I think it is sufficient enough information to allow us to assume that we will follow consolidation. Yes, quantitative easing and the introduction of liquidity, these are all great things, but it doesn't cause assets to go up out of nowhere. It takes a lot of time. In this specific event, you can say from the beginning of QE to Bitcoin really going to the upside, it took 14 months. 14 months. So I'm expecting consolidation, and in that consolidation, we can potentially see maybe a black swan in between. Who knows? It's just a lot of time. I'm just buying and accumulating because when I focus in the next year and a half, I know the trajectory will be towards the upside. So I'm buying, and that is what I wanted to say. It can take some time for us to see those gains again, but I think it's different. I think we've seen a change up, and 2026 could be a little bit depressing, but when we go into 2027 and beyond, the efforts that we put in this year are going to pay off in the next few years. So this is where you guys have that opportunity. And when it comes to things like Ethereum and altcoins, until we can see the expansion in the ISM, which will be brought in by the expansion of liquidity, altcoins aren't, in my opinion, are going to do much either. The ISM always goes up first, and then altcoins follow after. It's lagging. Here, the ISM is still in contraction, and not an expansion. It's going to take time for you to go into expansion, and then it's going to take even more time for altcoins to catch up. But I think they will eventually do. So I think we're in a time of accumulation. When we zoom in into the nitty-gritty, and I'll show you the exact price points of that ranging or that consolidation in Bitcoin price, I think this is what will happen. So first thing is first, Bitcoin from a post-topping perspective, even after you top from Q4, which you've done all the time, or if you zoom into the 2019 price action and look into that range, Bitcoin always, 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 following a mid-cycle top or a Q4 top, it always goes to its 200 daily moving average. There is no explanation to it, it just does it. So because we've done it all the time, even in that mid-cycle top in 2019, I assume that Bitcoin will go to that 200 daily moving average between this month all the way until potentially March, and that's currently sitting at 106.7. It can change if Bitcoin consolidates more at lower levels, but I think we will reach that 200 daily moving average. Once we do, I think we're going to see a rejection, and Bitcoin's low point, in my opinion, will be between 71 or the low 70s to the mid 65K level, as that is where the most amount of demand is. And we know that Bitcoin's current production cost is also at 70K all the way down to the mid 60s. Commodities, Bitcoin is a commodity, they never trade below their production cost, but they can consolidate around it. So I think the mid 60s to the low 70s will be our low. And I think it will be, that's the place where I think is the most opportunistic area to buy more Bitcoin from my view. But then again, just as a TLDR, I think we're going to consolidate for most of this year and see good outcomes in 2027 and 2028. Can I be wrong? It's possible. But I think that Q4 is when we're going to start to see sparking of the markets again. But until that point, we can also experience some frustration and price action. A drop to 65K would be a pretty big dissatisfaction to Bitcoin holders. So thank you so much for watching. Take care, and I'll see you all very soon. Bye-bye, guys.